In this video, I am going to be showing you the meaning of balance, equity, margin, free margin, margin level in percentage, what all of these things refer to in Forex trading. So the balance refers to the amount of money that you deposited into your trading account. And it also refers to the amount of money that you can withdraw from your trading account. So for this particular one, now I am in a trade and this is the balance. For me to withdraw the whole of this amount of money, now I have to close this trade that is currently going on. Now equity refers to that floating profit or floating loss. What it means is that I have profit of about 200 now, changing to 100. Okay, so if I close this trade currently, this profit of 400 will be added to my balance. So the equity is telling you the money that will turn to your balance once you close your trade. So by the time I close this trade, this 102,600 plus will become my balance automatically, and at the end of the video I will close it and you'll see whatever is here becomes the new balance. Okay, that is what equity is simply that money that becomes your balance when you close your trade. So next is margin. Margin is the amount of money that your broker requires that you must have, at least you must have it in your balance first before they can allow you to open any trade with this particular lot size. So since I want to open with 0.3 lots, they require that you should have 302.24 before they will allow you to open 0.3, and I have more than that, which is 102,000, so they can allow me to open 0.3 lots. If I want to open more positions of 0.3, how many times can it be allowed? With 102,000, by the time you divide it by 302, you should have 337. So it means that this equity now, 102,007 divided by 302 is about 333 times. So they can allow me to keep opening about 337 positions of gold with this lot size of 0.3. Now the free margin is the amount of money that is remaining when that margin has been deducted from your equity. So if you have 102,600 currently, by the time you deduct 302 from it, what is left will be 102,200, the way you are seeing it here. That becomes your free margin. The free simply refers to the free balance that you have, that you can open more positions with them. This 302, your broker will hold it. So it's like a kind of a collateral that you have to give inside of your balance for your broker to allow you to open this position. So the free is the one that is remaining. That free margin is the one that is remaining. So since I need 302,000 and I have 102,300 remaining, it means 302,000 plus another 302,000 plus another 302,000. I keep opening these positions like that. So 0.3 lots on gold require I need 302,000. First position. Second position that I want to open will require another 302,000. So it will keep going like that until you have used up the whole of what the free margin, which is the free balance that is remaining for you to use. Okay, so that it is free does not mean you should keep opening it, because if you were in profit, it will increase the amount of money you are going to make as profits. If you were in loss, it's going to drain the whole of your balance. So that you have the ability to open 337 positions does not mean you should open it. So free margin is simply that remaining balance when your margin has been deducted. And one thing in Forex is that by the time you keep making profits the way you are seeing it, your free margin keeps increasing. So it allows you to open more positions. That's why you see some people who start trading with $10. By the time they make $50 from that $10, they can open more positions again, because it has given more of the free margin. It's giving them more because they are making profits. And by the time they open more positions and they have now made more profit, it allows them to open more positions again. But if it's in a loss, it will drain it and reduce your ability to open more positions. So that is what free margin is all about. Now the margin level in percentage simply refers to your equity divided by your margin, then you multiply it by 100. So what this is telling you is that by the time I divide 102,900, this is the equity, I divide it by 302.24, whatever it gives you, multiply it by 100, that will be the exact number you will have here as your margin level. So that becomes your margin level in percentage. Why is this margin level in percentage important? Your broker, before you register, read their rules. Some will tell you once your margin level falls to 50%, they will automatically close you out. Some will tell you once it reaches 100%. Some will tell you once it reaches 300%. So that's to tell you, if you are trading and this margin level falls to 300% and the broker says once it reaches 300%, they will send you an email known as a margin call, telling you that your margin has dropped below the level they can tolerate. So you either add money or they will close the whole of the positions. Now, a newbie that does not understand what trading is all about may just open positions that are bigger than your balance, and your margin level will fall and reach that level they can't tolerate. And you see the whole of the numbers that are here will become red. They will turn red. And if you don't add more funds, they will close the trades. So whether the trade now reversed again and go in your favor, they have already closed the trade. Okay, that is what this margin level refers to. So some brokers, their margin levels are 0, which means that a margin level of 0 can allow the whole of your account to be drained. So the whole of our account can be drained. If some are saying it's 100%, at least when it reaches that level, they close it, you will still have a little amount of money in your balance remaining. Okay, so you should not play with this margin level. If a broker tells you their margin level is 50%, so if it reaches that 50%, they will close all of your trades. Okay, so just take note of that. Understand the margin level of your broker, and then from there you can know which positions to enter and how to set your risk amount so that they won't close you out of a trade that may end up going your way. So having known all of this: balance, equity, margin, free margin, and margin level, I can now decide to close the trade. So if I close this trade now, this 103,000 automatically becomes my balance. That is simply what equity is all about. So let me just close it to show you. Any amount that is here becomes what is the new balance, because I have now made profit. So you can see when I closed it, the equity now turned to the new balance and I have made profit. If I was in a loss and the equity was reading 99,000 and I close it, this balance becomes 99,000. So with this, we have come to the end. If you have any question regarding what balance is in Forex trading, or equity is, or free margin, or margin level in percentage, just let me know in the comment section. Do have a wonderful day. Bye.